The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Not really a stock of the day, but thought we'd take a look at the big four banks because they're often the largest segment of a private investor's share market portfolio. Share market showing signs of cracking. It is cracking today, down 2.7 on the All Ords, 2.7%. Big falls on Wall Street over the weekend. Now, a lot of people have been saying sell the banks, and particularly Commonwealth Bank, for a long time, but people keep buying it. So today, the banks are all down well. Their losses are way more than the actual market itself. So is this a short-term hiccup for the big banks, or is this reinforcing the recommendation of a number of the brokers and analysts over, I would say, the last 4 or 5 months that the banks are overvalued? And do they get downgraded, cut more than the overall market if there is a pullback? CBA, as you see there, $127. It was $138 last Wednesday. ANZ, NAB, Westpac had also climbed to record highs in July. They're now well down. So David Lane, those clients of yours that have hung on to the banks and big four banks, and with Commonwealth Bank, you've got to remember a lot of people have held them since the float, since the IPO. So there's all sorts of tax issues involved, and that's why you should get your own independent advice. But what's your feeling on the big banks? Will they be bigger casualties than the overall market?
Yes, I think they will be, and certainly in the short term. And it's a double-edged sword that because the banks are so large, that's part of the reason why we've seen them rally so strongly over the last 12 or 18 months, because money coming into the market, particularly as far as the large super funds are concerned and international investors, they generally tend to move with the index and move with the market. So you've seen a flood of money come into those 4 major banks, and then on the downside, the opposite is the case as well. So they're large, they're liquid. The big players in the market will be selling the banks today, and that's obviously part of the reason why the share prices are down. And you generally tend to find in market corrections or movements like this, they're the big players that the top 20 are the ones that tend to move the most initially. As far as individual investors, as you said, there's a lot of investors that do hold the banks in their portfolios. We've been fairly negative on them for a while, so we do have a sell recommendation on CBA. We've got a lighten recommendation on NAB, and then a hold on ANZ and Westpac. So we have been taking some profits on those banks, but again, when you're talking about individuals with their portfolios, it's very easy for us to say sell CBA. It's another thing for the clients to actually accept that recommendation and sell them.
And look, even today, they're up 25% for the year. Commonwealth Bank shares, exactly, even after today's pullback. And is it true, because they make up such a large part of the index, index funds, if you like, automatically have to buy them because it's part of their trust, if you like. But when the market comes down, then they suffer as well, because they've got to flog banks in a big way. So it gets accentuated on the upside and the downside.
Absolutely, yeah, that's definitely the case. Index players, and you are starting to find a lot of investors who will go into those ETFs. The ETFs are a bigger part of the market as well. They're based on the index, so they will move with the banks as well. So it almost feeds on itself in the short term movements.
Okay, Kai?
Yeah, putting into context, basically this year again up 25%. The banks has had stellar run. And I think, given that it is a big sentiment shift in terms of the market, I think it is a good time for investors to be taking off profits if they've done really well over the year.
Right.
I think...
generally, rather than just big banks, you're saying generally?
Yeah, and it's been a bit of a head scratcher because we couldn't really figure out why the banks have performed so well, given that there's been so many interest rate hikes.
Yep.
So
many people have said sell.
Yes.
I don't think there's one analyst over the last 6 months that we've had here on ausbiz that has said buy the big banks. They've all said take profits, sell, get out, overvalued, and still kept going up.
Exactly, so now I think is probably the time to actually put that into action where we are seeing cracks. Traditionally we've done studies in the past where banks going into recessions, generally tend to underperform going into that and they bounce out fairly well.
Right.
And I think we're in a scenario where the case for soft landing has been kind of written over. All the analysts are basically saying, okay, we've achieved soft landing, but all the economic figures that's come out recently, the unemployment in the US that came out, it's softer than expected.
Yeah.
So people are starting to see that there's maybe another story, it might not be a soft landing and we could see a hard landing. And if that goes into the case where we do go into recession, the banks are going to underperform, but coming out of it, get back into the banks.
Yep. Okay, more generally, you've been saying to people take profits anyhow?
Yes.
Is it too late after today?
No, I think, generally that downfall, that down move, it probably has a 6 month span.
Right.
It could go up to 6 months. So I think we're really early days in terms of that correction, which it doesn't mean there could be bounce backs and stuff like that.
Yeah.
But I would be positioned, if you've done really well out of the banks over the last couple of months, I would take some profit.
Yep. And you would expect a bit of a bounce in America, sort of. Often it's unkindly, if you're an animal lover, called a dead cat bounce. When there's a big fall, it usually bounces up the next session and sort of suckers people in that the worst is behind us. Often it's not. All right, big four banks. That's been our stock of the day, our sector of the day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.